Welcome to Insights. I'm Eric. Thanks for tuning in today. We're going to talk about the grain market. This is really an ongoing conversation, mostly because of the setup and the movement through the evolution of the trade. If you're a subscriber and you're trying to figure out how we move in the trade discipline that we use, I'd click this link here and I'd study the four phases and completely understand them in terms of these discussions that we have, not only in the written but in the video or visual reviews. They will be much easier to understand and probably will move you along to a different direction that elevates you above traditional TA and the conversation that takes place out there in the internet. So the reason we're talking about grains is the USDA report that came out on Thursday. I'm not sure what it said. I have no idea whether it was even on the surface bullish or bearish. There are some comments out there. I included one of the comments, not in any particular manner to criticize it or do anything because I don't really follow the report. Just because I don't follow the report doesn't mean I don't know or we know what's going on in the market. It's just that the reports themselves are too often revised from a government perspective. And I find that over the years and decades that I've done this, that most reports are ignored by the market. They're only traded around them short term, and then the markets take off and continue their trends based on other factors, which I talk about in terms of the invisible hand. So, in this individual's take was is that, and soon the funds might be selling. My only comment there is it's possible because the weekly trends are so extended, but I doubt it's because the fundamentals that were reported are somehow bearish in terms of the energy builds that we're seeing, and in particular the composite grain DI. It's pretty high, and as I've stated before, I have no idea what it is, and we're really not going to find out what the solution or what the answer to that question will be until much later. It'll filter out into the mainstream media world and the internet eventually what's causing all this. If I suggested any of that stuff now, the fact that I probably don't have the credibility in this market is just going to have bring down the ire. But the one thing that I should have credibility in, and I'm sure people who subscribe here and follow this, is that we know how to track the invisible hand, and the invisible hand is kicking us in the shins and saying something is wrong. And we'll talk about that in a second. This is a conversation we've had before, so we're not repeating or bringing up anything new. This is kind of a repetition. So if the funds aren't going to sell, I mean, what is going to take place then? And the real threat is that for all three of these markets, even though there's an extended weekly trend, and these are the price cycles and the time cycles, and some of them are above 3 standard deviation. Time is approaching 3, which means that that's getting pretty extended. These markets should be correcting. They should be correcting pretty soon. But that doesn't mean that they will. Sometimes they get pushed until 3 and something crazy, 4, 5 standard deviations. Would any of this means that it's time to chase? And I would not be doing that. The play here is to hold the core position, maintain your resets if you've got them. Corn reset 9 days ago, and it's it's recovering. It's probably making a profit. If you're uncomfortable with the weekly trend and the movement that's or the cycles that are being displayed there, it would be time to take some profits on those positions into strength. But the core position has to stay up, and it will stay up as long as the primary trend or the monthly trend cycles, and here's price and here's time, are not extended. They're blue. They're cautioning us that things are getting a little warmed up. They're above, anything below 0 is below cycle. So it's above the normal cycle. But in terms of even corn, the time cycle is still relatively new. Soybeans right at its mean, and wheat is only slightly above. This can go on for quite some time. You can get cycle scores that are much higher than we are here. 2 is not uncommon. But then once you get into that range, the computer is going to be directing you towards the door. Already wheat is in primary trend decline 1 because it's above 0.5. It's only slightly above 0.5. So this is probably going to play out numerous times, and anyone who holds the core position of long is likely going to make some money, and because wheat is playing catch up as we expected, that energy build that was very bullish at one point and has now dissipated rather quickly has powered this advance, and it will do so until a blocking dome forms. And we can take a look at these energy builds in quick or sharper detail in a second. If you want to click these links inside the matrix, you'll pull up the charts that we're going to take a look at in the cloud. And I've set them off to the side here for just for speed, so we don't have to download anything. But really, I think what concerns me the most in terms of something is still wrong, and we're going to get an updated figure on all these DIs today here by later in the afternoon, and I suggest everyone tune in. We should expect to see some of these DIs move lower as price has rallied. But into this number and suggesting that the number, the U.S. crop report mattered or somehow is bearish, it just doesn't line up with what the DI energy builds were saying. Not too long ago, we were above 40, which is a threshold for a bullish. I didn't mark it here with a green cup, but there is a green cup right about here. And the same green cup that was right about there and there, which spawned the rally, we've got another green cup, which has created almost as equally strong of an energy build, which could fuel another impulse higher. So whether or not the USD report matters, I think it's really meaningless. The invisible hand is thinking about something else. It's looking at something else. I mean, if the invisible hand was worth its weight, which it is, it's not going to be looking at the government's report for through August and the crop conditions or whatever they're going to pull out into the marketplace in its various forms. Again, I can't even speak in terms of the proper language because I'm not there and I don't attempt to. But the language that I'm trying to teach is the language of energy and DI instead of the internet ridiculing it, which it often does. And that's a sign that it's touching on something and it's making people feel foolish. And I do sympathize with that. But my advice is to dig right in and to learn what's going on here because it's far more powerful than people realize. Instead of spending all your time making fun of it and criticizing it, you'd actually might find it useful and embrace it. So this is why we continue to plow ahead with it because I know it's a consistent source of information that looks ahead of the headlines. So what is it looking at? We'll find out. I mean, I've suggested it could be a breakdown of global supply. It could be human related. There could be further lockdowns. There could be negotiations. There could be war. There could be anything that changes the export import situation, but something, so as long as this is hanging around up here, the fact that a report would be bearish is probably not right. I mean, again, I can't give you the explanation, but if it was, if everyone's about ready to sell, or if this is a bad market, this would be down in here, and that's not what we're seeing. And if you break down the individual markets, you can see corn's pretty high. Corn's not quite as high as it was when it triggered the rally back in here, so it's not as strong. What's strong is soybeans. Soybeans didn't have the build right here that triggered it off. It was somewhat muted. Well, now it's coming right here. This is a much stronger energy build than we saw when it turned back in 2020. So I'd be very careful if you were bearish soybeans, even if the weekly trends are extended, the primary trends are not. And the weekly trends don't go as far as back as the primary trends, so they can get pushed a little bit further. They're not quite as static as the monthly trends are. So I'd be concerned about this setup. This setup is, and there's no lack of a better word, it's just a high energy, extremely bullish. It can go higher, but when you have this type of setup in an uptrend where the primary trend is up, it's extremely powerful, or historically extremely powerful for every asset in the matrix. It's not just soybeans, it's for every asset. Now, we're just talking about soybeans right now, but if this was Bitcoin, I'd have the same interpretation. And that's what makes following the evolution of the trade so powerful. It applies from one market to the next without any concern and any experience in that market. The last one we can see wheat. We can see the bigs uptick here. I didn't label it. Should be a green cup right here because I didn't label that either. Things are moving around too fast, so I haven't gotten into these charts and marked them up. But this created a green cup right there. of which now prices responded, and everyone's shocked that wheat is about ready to take out its high. I warned that wheat was in a powerful energy build. Wheat is a bit extended, but it has enough energy to jump the creek. And that's going to wheat's going to continue to go, and it could jump the creek here today. It could do it in the next week, but it won't slow down until you get a powerful energy build, the bearish one, onto the downside. So you're going to have to pull DI2 below minus 60, and you're going to have or DI, and you're going to have to pull DI2 below here too. It can go actually it can go below minus 60 as well. We've seen it a couple times, but it's going to go lower than we are here. So this represents a release of this short-term energy spike, but this is a pretty decent sized spike considering the primary trend is up. So these are all things that we've talked about in the video reviews. I want to keep anyone who's subscribing to the Matrix, please track all this stuff. In terms of even the move in wheat, remember, this is where we stand. We're up for 20 days and this and a pretty decent sized profit. The profit cycle is already getting extended. It's 1 and the time cycle is 0.5. Wheat's not going to run forever. So log back in and keep watching this. If you've bought the reset or some type of reset within wheat, even though it might be difficult to show here always because it's in primary trend decline 1, any reset that we get up that gets generated here until really this number goes above 1, which means that the primary trend is getting quite old. It represents an opportunity to take some money off the table. So if this thing reaches above 2 or this thing reaches above 2, take some of that additional position that you grabbed in wheat and take it off the table. I don't know how many. The internet prepared everyone so poorly for the wheat rally. I mean, it was phenomenal. I'm watching people backtrack on the internet left and right, saying how they were wrong. But frankly, in mid-July, you could have seen how they were wrong and how something was really wrong in wheat as well. And this was many weeks ago. I mean, now it's old news and no one says, oh, let's go back and look at it. But go back and look at it. I think that was mid-July and the DI reached 70, and I was waving my arms around going, wow, that's unusual. And the Bears are going to get smashed by that one eventually. And now eventually it's here. And now everyone can't believe it. So they're backtracking. So but that's how this stuff works. You watch your energy builds. Energy builds provides an interesting perspective that complements trading far more than anything I see on the internet. There's a lot. There's a couple sources that I know. I don't talk about them too much because they're there, but they're quite ingenious as well. But in general, what's taking place on the internet, Twitter, Facebook, it's not ingenious. It's just a bunch of people talking about markets, and it's I don't know what people use them for. But the reality is the setup is not what it continues to be. Perhaps it's going to change with today's release of the energy numbers on Friday. Maybe it will show huge dissipations here into the rally. I doubt it. It takes time to dissipate energy. When I say time, it's going to take multiple weeks to months. So I don't suspect these things are going to slow down and generate blocking domes. When they do, and this thing moves even further, we're going to talk about it more. But try and at least be objective about what you're reading out there and frame it against the matrix, frame it against the computer's interpretations and how assets move through the evolution of the trade. Subscribers that are long-term subscribers that have been using it are doing exactly that, and keep your mind open and move around from one asset to the next. And if you're focused on the grain market, because that's what you do, then keep your mind open in terms about what it's saying relative to your passions. Your passions can bring in emotions that blind you to what the market is actually saying to you. And it is that objectivity of the computer that's difficult to really achieve without it. You can get lost in your own emotions quite easily. And that's why I encourage everyone to take a subscription to this, because it's really a check to yourself. Yourself is your worst enemy, and it self-contains ego, and I see that all the time. Egos on the internet are wrong and they won't admit it, and then they pat themselves on the back, and it's just you even if maybe they can get away with it because they're extremely skilled traders, but if you adopt that type of anything that they're doing, or adopt their interpretations, or employ the same tactics, you probably won't have the same outcome without the level of experience that they're using. So be careful with a lot of that. That's it's all part of the trading business, and it's controlling self that's extremely hard to do. If you have any questions about what we saw, the grain market, or if you want to have any input on what you saw in terms of the reports or anything you're seeing in the matrix, let us know. We can always share that, or we can have a discussion about that privately. If not, if you're looking on, I encourage you to go back to the blog and take a look around and subscribe to the matrix and follow these markets as well as numerous others here that I've blocked out. But the interpretations are exactly the same as how we talked about them today. One thing before I go, and I was going to mention this, is if you're trading wheat could push the extremes all the way until the end of December. But clearly, this block right here, as we see a lot of red numbers, could be the where everything slows down and finally stalls. So don't jump off the train too quickly. But in general, I am targeting this particular time frame. It's always the first half of the year. Apparently, this is the seasonal trend since 1959. I'm I'm pretty sure this can get confirmed from many other sources, but wheat's looking primary trend decline 1, and it's showing some extension, but this thing could push a little bit longer. So you try and be patient. To do that, you don't use too much leverage. You don't expose yourself in terms of the shorter term. Don't chase the daily trends without a reset or any of that stuff. But try and hold that core position before you pare it back as long as you can. If anything unusual comes up, we'll let you know. So basically, thanks for watching today's video. Keep an eye on the grain market and keep objective as we move through 2021 and 2022. We'll talk to you guys later.